Hey guys, what's up? Alec back with the daily stock market, and Facebook is down 5.9%. We're also going to go over other stocks like Tesla and Nvidia, so make sure you stay to the end of the video. But what this video here is going to be about, I'm going to go over one of the top 3 best deals in the stock market that you can buy today. Okay, and we're going to go over several reasons why. I know a lot of those other YouTubers don't jump into the net income and the revenue breakdowns, so we're going to go over strict numbers, balance sheets, and everything that value investors want to look at. And that stock we're talking about is Mr. Mark Zuckerberg stock, Meta Platforms, at $188 per share. This is grossly undervalued, and let me show you guys why. Not even that it's down 50% from highs and hasn't moved from then, but look at that PE ratio. This is the first number we're going to start off with. I want you guys to pay attention to 4 different numbers on the screen here. The PE ratio is the first one. Okay, that's 15. The market cap is 511 billion. So Microsoft, for example, is 4 to 5 times the size of something like Facebook, which you think would be one of the biggest companies in the world. But right now, Tesla is even twice the size of Facebook. Here we have Tesla stock pulled up with a market cap of 1 trillion and a PE ratio of 210. Here we have Microsoft pulled up with a PE ratio of 30 and a market cap of 2 trillion, which is 4 times the size of Facebook, and it has to be one of Facebook's biggest competitors going into the next 5 years because of the whole Meta rebrand. And the main reason I'm making this video on Facebook right now is because of the current state of Facebook, $188 per share. That price point, it's just such an attractive price point for me. You know, if Microsoft was at a 52-week low, or, you know, it looks like Facebook's actually at like a 2017 low, because remember in 2018 they were $209 per share. In 2017 they were $180, $170 per share. So if they continue below 180 and closer to that $150 mark, I don't want to miss the opportunity to be really loading the boat under 180 and closer to that $150 mark. Even though I am comfortable buying anything under $200 per share for long-term investing, however, I do want to load the boat closer to that $150 to $180 price point. Also, I sent a very long email out to my close friends list once a week that includes 5 different stock recaps, and one of those this week was Facebook. If you aren't on the close friends list and you want to get on, make sure you stay to the end of the video to figure out how you can become on it, or just reach out to me on Instagram. So you'll see Facebook revenue and net income has grown by 20 to 30% every year for the last 5 years, yet Facebook price is where it was 3 years ago. I think about the market is undervaluing Facebook right now because the company does not have a good reputation. The rebrand to Meta, I think, is going to be bigger than what people realize in the next 5+ years, 5 to 10 years. And I think the price is a steal for long-term investors. I think Facebook can easily be around $300 or more per share in the next 24 months, 12 to 24 months, which would be over 65% gain from current prices. I want to buy most of the shares under 180 or as close to $180 per share as possible for the best ROI potential, return on investment, but I don't mind dollar cost averaging into anything $200 per share, under $200 per share for long-term investing. Okay, so now the next numbers I want you guys to remember is net income and total revenue. And the first one we have up is Tesla. So you can see they have a net income of 5.6 billion. And make sure you stay throughout this entire video because there is some points I definitely want to make in this video, and I'm not going to take too long to get to them either. So first up, we have Tesla with a $5.6 billion in net income. So write down 5.6 net income. Total revenue, 53 billion. And their balance sheet, they have a 40% debt to asset ratio, 49%. Now, if we go over to net income on Facebook, for example, we have 39 billion in net income. So they're blowing Tesla out of the water. They're half the market cap of Tesla, and nearly 10% of its market cap is their just straight net income. If you go to total revenue, we have 117 billion in total revenue, and that's probably going to be growing. We also, if we look back at the last 5 years, we see the cleanest track record a company's almost ever had for as big as they are with net income, with total revenue. So total revenue is 117 billion. Okay, which is twice that of Tesla's. And you guys might say, or someone might say, Tesla is a huge growth company. They're going to be expanding in the next 5 years. So that's why they have that valuation. That's why they have that PE ratio. They're not a value stock, they're a growth stock. Okay, well, I totally get that. But the only reasonable explanation that you think Facebook wouldn't be a growth stock is if you don't believe in the metaverse over the next 5 to 10 years. Facebook's net income is 5 times that of Tesla. The total revenue is also twice that of Tesla, yet the market cap is valued by half. It's worth half of what Tesla is. Also, if we go down to the balance sheet, we see the total assets at 165 billion with a 24% debt to asset ratio. And again, we want to see that ratio as low as possible. If we can see zero, back in 2018, we saw that Facebook even have 13% debt to cash, which is phenomenal. Also, the assets on Tesla, here we have Tesla's balance sheet pulled back up. It has over double the assets as Tesla has. So let's compare it to Microsoft then. Microsoft should be blowing Facebook out of the water. They're basically at a 52-week high. If this was a Facebook graph, it would probably be like $150, $120 per share. Facebook's been beaten down. And we also see that it has a $2 trillion market cap, which means that it's 4 times the size of Facebook, which implies that it should be bringing in 4 times the growth, 4 times the net income, 4 times the revenue, 4 times the assets. Now, if we go down to their income statement, we can see that they only had 61 billion in revenue, which is only a 50% increase from what Facebook did, yet their market value is 400% increase of what Facebook's market value is. We also go to total revenue and we see it's only 168 billion, which is only up 17% of 117 billion on revenue for Facebook. Okay, so it's only a 40% increase, yet they have a 400% of their market percent. Now, their balance sheet also doesn't look as good as Facebook. Their percentage is past 50%. Debt to asset ratio should be closer to 30%. And they do have twice as many assets, but they have like triple or 5 times as much as debt. Okay, so that percentage is way off. And on total revenue, we don't see any kind of growth like Facebook has. You see 5% growth, 14% growth, 13%. They don't even break 20% growth, Microsoft. And Facebook's doing like 20 to 30% growth on revenue every single year. Not even to mention the Oculuses that they sold. They broke records on their most VR headsets sold. Christmas season, you guys probably heard about that. To sum this all up, if Facebook was valued the same way that Microsoft was, for example, not greater, not less, just the same value. Even though in some aspects, some people could say that Facebook is a better growth stock and a better value stock for many reasons that we went over. Mainly looking back at the last 5 years and seeing that the revenue growth is significantly more than Microsoft's. In this case, we should see Meta Platforms price around $300 to $500 per share if it was valued the same way as Microsoft was. And in my opinion, it will be valued the same way as Microsoft was. It's just going to take some time. Right now, we have Mark Zuckerberg all over the news, privacy concerns, this, that, the other, a lot of drama going on with Facebook. Once people realize that Facebook's here to stay, they own Facebook, Instagram, WhatsApp, and now Oculus, and Oculus is growing consistently. Meta, they have huge plans for Meta. I was watching an interview that even said that with the metaverse, people think this stuff's going to happen in 5 to 10 years, where it could actually happen a lot more exponential in the next 18 months to 36 months. We could have a huge breakthrough, and I think Facebook and Microsoft are going to be 2 leaders in that space. I'm heavily invested in Microsoft, by the way, so I'm not biased towards Facebook. Just looking at the straight numbers, I think Facebook's more of a growth play, and Microsoft's more of like a safe, I don't want to lose any money because Facebook obviously does have more risks. Microsoft seems like it does have more stability. However, if it hits the fan and one of them is going bankrupt, Facebook is more likely to survive, and that's why companies have balance sheets. I know a lot of creators don't go into balance sheets and net income and revenue, so sorry if it did bore you, but I like to go over the important details. Balance sheets are a good way to look at if a company's going to go bankrupt, can they survive? And with the debt to asset ratio like Facebook, they will easily be able to pay off all their debts and be able to go on. Microsoft has significantly more debt than Facebook, so it would be a lot harder for Microsoft to pay off its debts than its counterpart like Facebook. Now, I was also going to go over Nvidia in this video because they're a stock that I want to talk about that could be looking a little bit undervalued, especially if we get into that $150 range, but I'm going to save them for the next video. So if you want to hear me talk about Nvidia and some other banger stocks, make sure you subscribe with post notifications on for more content like this. If you want to get on my close friends list, now could be a life-changing opportunity to buy stocks during this dip, especially if you're going to be holding for 2 years, 3 years, or 5 years down the road. That's where a lot of the gains are going to be made. You could read success number 5 on students that had many success with the program. Success number 4, there's now over 400 positive testimonials. Also, Canadian students, we do have a lot of those, over hundreds of Canadian students using Questrade, Wealthsimple, Interactive Brokers. We do option trading in the close friends list. I also want to show you guys my Twitter. This is a really special place. It's TDSM Stocks, by the way. That's my handle. But the good thing is that I retweet a lot of stuff. So if you're looking for fresh content that I don't post on Instagram, I retweet all the best tweets every single day. I do at least 10 retweets or more per day. So you're going to be getting a lot of fresh information on Twitter. If you're a Twitter user, make sure you go ahead and follow me over at TDSM Stocks, the daily stock market, on Twitter. Also, I'm going to be doing a giveaway over at the Daily Cryptocurrency, my only other Instagram. So make sure you follow me there if you're all about NFTs and cryptocurrency, or if you just want to win some free NFTs, also make sure you follow me there. All right, guys, make sure you share this video with a friend if you think they'll find it helpful. Make sure you smash a like button and subscribe with post notifications on. I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.